Hey there, welcome to That's All, the channel where we break down finance, explore the smartest AI tools, and chase mental clarity like it's a limited time crypto dip. If you're into leveling up without burning out, you're in the right place. Today's video is about finance and trading 101, a beginner's guide to smart money. Whether you're just starting out, feeling lost in the sea of financial jargon, or trying to understand where your paycheck disappears every month, this video is here to guide you through the essentials. We are not here to overwhelm you with equations or chase unrealistic promises. Instead, we will explore real, practical ways to take control of your money, build wealth steadily, and make confident decisions in the world of finance and trading. Finance can feel intimidating, especially when it's wrapped in graphs, buzzwords, and fast talking experts. But here's the truth: managing money is something anyone can learn. You don't need to be an economist or a math wizard. You just need to the right guide. In fact, understanding finance is one of the most empowering skills you can build. It affects everything from your daily habits to your long-term freedom. And if this all feels unfamiliar, even a bit confusing, you're exactly where you need to be. So, let's begin at the beginning. What exactly is finance? Well, finance is the art and science of managing money. It's how people earn, spend, save, invest, and protect their wealth. It exists on every level, from the coins in your pocket to billion-dollar corporate decisions. At the personal level, finance means budgeting wisely, saving consistently, and making choices that secure your future. It helps you buy what you need, save for what you want, and prepare for what life throws your way. Finance isn't just about numbers, it's about decisions. And the better your decisions, the stronger your foundation becomes. There are two major branches of finance: personal finance and corporate finance. So, the personal finance focuses on individuals like you and me, how we handle our income, expenses, savings, investments, and financial goals. It's about learning how to live within your means, avoid debt traps, and plan ahead. Corporate finance, on the other hand, deals with how companies manage money. Businesses make decisions about funding, capital, profitability, and shareholder value. While corporate finance is complex, the core idea is the same: using resources wisely to support long term growth. While personal finance asks, "Can I afford this coffee machine?" corporate finance asks, "Should we acquire the entire coffee chain?" Well, one helps people sleep better at night, the other keeps CFOs up at night. In this video, we will stick with the personal finance, that one you can't control right now. Now, here's something a lot of people don't realize: finance is a skill, not a personality trait. You don't have to be a genius. It's not some talent you're born with or without, like cooking, driving, or learning a new language. Personal finance is something you can practice, improve, and eventually master. And yes, it takes time, but it's absolutely worth it. The sooner you start learning, the more confident and secure your future will be. Think of it this way: even a small step forward better money habits is better than standing still. And hey, if you can survive parallel parking and assembling a IKEA furniture, you can totally handle a budget. As we continue, it's important to understand a major fork in the road: the difference between investing and trading. Although both involve buying assets like stocks or crypto, the mindset, strategy, and time horizons are completely different. Knowing which one suits your goals will make or break your financial journey. If you're in it for the long term, letting your money grow like a well kept garden, you're thinking like an investor. But if you're buying and selling frequently to catch fast moves, you're in the world of trading. But let's take them one at a time. So, investing is the process of committing your money to something with the expectation that it will grow over time. It's like planting a tree. You don't see the results right away. It takes nurturing, patience, and time. But with consistency and care, that investments begin to bear fruit. In the financial world, this means buying assets like stocks, index funds, or real estate and holding on them for years. You earn returns, checking your portfolio every hour won't make it grow faster. Just like starting a tree won't make sprout apples. Well, trading, by contrast, is faster, more active, and riskier. Think of it like surfing a wave. You have to jump in at the right moment and hope you catch the time just right. It captures the thrill, but also the volatility. Traders aim to make profit from short term price movements. They buy and sell assets like stocks or crypto in minutes, days, or weeks. While it can be profitable, it requires serious discipline, emotional control, and a deep understanding of the market. And for beginners, it's often an expensive learning curve. Most people who try to trade without preparation end up buying high and selling low, driven more by fear and greed than by the strategy. Well, basically, it's like trying to do brain surgery after watching one YouTube video. Looks easy until things go horribly wrong. So, here's the problem. Many beginners say they're investing, but behave like traders. They buy a stock on Monday, check it 12 times by Tuesday, and sell it by Wednesday because it dropped a dollar. Well, that's not investing, that's just a cardio for your anxiety. The key is knowing whether you're in it for the long haul or just flirting with it in the market. Mixing investing and trading without a clear game plan is like trying to bake and grill at the same time. You'll just end up with burnt cookies and broken oven. If you're new, start by investing. Learn the foundations first. You can always explore trading later when you're ready. Start slowly, build your knowledge, and remember, even Warren Buffett didn't become a legend by chasing charts and vibes. So, now that we covered the how, let's move to the where. Where this financial activity happen? Well, in different markets. Each one has its own style, rules, and level of risk. Understanding these markets helps you decide where to put your money and what to expect in return. Let's check the common market types together. The stock market is probably the most well known. It's where individuals buy and sell shares publicly traded companies. When you buy a stock, you're buying a piece of a real company. For example, if you buy one share of Amazon, you technically own a fraction of Amazon. You benefit when the company grows and its stock price rises. This market has existed for centuries and it's heavily regulated. Stocks can provide both growth and income through dividends. And while prices do go up and down, historically, the stock market trends upwards over time. So no, you are not gambling, unless your strategy involves dice and wishful thinking. Some companies are more than just brands. They are investment staples. Think Apple, Amazon, Tesla, and Google. These are called blue chip stocks, and they tend to be well established, financially strong, and often considered safer bets. The stock market isn't some mysterious place. It's where everyday products and services become investment opportunities. When you invest in these companies, you're not just watching charts, you're participating in businesses that shape the modern world. Then we have the crypto market. This is a newer and faster moving space that's gotten a lot of attention in recent years. Cryptocurrencies like Bitcoin and Ethereum aren't tied to any one country or company. They run on decentralized networks using blockchain technology. That means transactions are transparent, secure, and global. But with that innovation comes volatility. Prices can change drastically in hours, even minutes. It can be exciting, but it's not for the faint of heart. If you're interested, start small. Learn the technology, the risks, and how to keep your digital assets secure. And if you don't understand it right away, neither do half the people tweeting about it. So if you don't take financial advice from your Uber driver, You don't need to worry about it. Let's now talk about ETFs, the exchange trading funds and index funds. If investing in a single stock is like choosing one fruit, ETFs are like buying the whole fruit basket. They hold a group of stocks bundled together, so you don't have to pick winners and losers individually. This is a great option for beginners because it spreads your risk. Instead of relying on one company to do well, you invest in an entire market sector or index such as the S&P 500. Index funds track these indices and provide steady growth over time. Just like a smoothie, ETFs blend many ingredients to create something balanced and nutritious for your portfolio. It's efficient, less volatile than individual stocks, and perfect for building a long term strategy. Think of it as the lazy genius way to invest. Set it, forget it, and let the market do the heavy lifting. The Forex market or foreign exchange is where global currencies are bought and sold. It's the largest financial market in the world, with over $6 trillion traded daily. But despite its size, Forex is fast paced and often overwhelming. You're trading currency pairs like the euro versus the dollar, and those values shift constantly, influenced by politics, interest rates, inflation, and even natural disasters. It's not an easy place to start. For most beginners, it's better to observe this market from a distance before jumping in. Because if you're not careful, your vacation money can turn into why did I just bet on the yen at 2 a.m. money, just like my dad did back in the early 2000s. Well, now let's turn to what you should do actually as a beginner in finance. So, first, understand the power of compound interest. This is the magic of earning money, not only on your investment but also on the returns your investment generates. It builds slowly at first, then suddenly you notice serious growth. This concept alone is why starting early is more powerful than starting big. Automating your savings is another powerful strategy. Set a portion of your income to go directly into a saving or investment account. This way, you remove emotion from the process and build wealth without even thinking about it. Tracking your spending is just as critical. Knowing where your money goes helps you control your future. Tools like budgeting apps or spreadsheets will do the trick. Just be consistent. We've talked about what to do. Now, let's look at what to avoid. First of all, don't chase hype. If an investment sounds too good to be true, it probably is. Don't let social media trends dictate your financial decisions. Avoid investing based on emotion. Panic selling during a dip or buying impulsively during a spike are common and costly mistakes. Avoid over leveraging. Borrowing money to invest can multiply losses just as fast as it can multiply gains. And lastly, don't try to time the market. It's unpredictable even for professionals. The consistent investor wins more often than the clever one. Before using real money, test the waters with mock investing or paper trading. Many platforms allow you to simulate trades with real-time data but zero risk. This gives you a chance to practice strategy, understand emotions, and learn tools without financial consequences. Like a pilot using a flight simulator, mock investing helps you build skill before real-world pressure kicks in. You don't have to do this alone. Tools like FinChat use AI to simplify finance, break down company reports, and answer investment questions clearly. This is about using technology to empower yourself. Finance doesn't have to feel like decoding a foreign language. Well, learning about finance is not a race. So, please start slowly. Be curious. Build habits one at a time. Fear of missing out is another strategy. Just because others are rushing into something doesn't mean you should. You need to be informed, steady, and focused. Because in finance, slow and steady doesn't just win the race. It avoids the emotional roller coaster and still has the time for coffee. And just like that, you now have a foundational understanding of finance and trading. We covered what money is, how to manage it, the difference between investing and trading, how to approach markets like stocks and crypto, and what to do and not to do as you begin. If you found this helpful, subscribe for more videos like this. I'll continue to break down finance, trading, and economics fundamentals in a way that's practical, honest, and easy to follow. I'll be covering things like interest rates, inflation, behavioral economics, and even quirky indicators like the Big Mac Index. So don't worry, we'll take this one step at a time. Ask questions in the comments and I'll do my best to help. And as always, that's all.